It's Jay Meisler here. Uh, June 23rd, 2014. Current time is 10:12 GMT with the daily Forex trading outlook. Uh, this is going to be an active week for at least the calendar picks up this week. But what we've seen to start the week is not surprising. Kind of the push and pull. The euro is a little softer. The commodity currencies are stronger. Dollar yen's back below 101, and sterling is staying within the range of 170. I think if you look ahead to the week, and I think this is important, the key date is Thursday when the U.S. Releases its PCE, which is a personal consumption expenditure. It's the Fed's favored inflation indicator, and that has the potential to move the markets and the dollar. So, everything leading up to Thursday probably is kind of noise, but we have a lot of data. As you can see today, slightly easier. Um, uh, European PMIs put the euro under a little pressure. Better Chinese PMI put the commodity currencies in a little bit of a demand. So let's look at the charts and see what it would take to really move these markets out of the current ranges. Just looking at the euro dollar, if you look at the weekly chart, the key level here is the medium term trend line, and that comes in at 134.73 this week. So that is at the major level, 134.75, and it's also a level that will be coming into range in the coming weeks. So something to look forward to, because that could be a game changer if it ever gets broken. And the big word is if. Look at the daily chart. The range is very clear. 135.03, 136.75. Everything in between that is considered noise, and the market's assuming that is the range until it's broken, unfortunately. But unless we take out 136.75, the focus is going to stay on 135, the figure. Now, if you look at the 4-hour charts, you have the 200 period moving average, which I mentioned has been intact since early May, comes in today around 136.40. So if you're looking for an indicator on top, that's your indicator. The bottom is very clear. You can see all this congestion here, and this. So we finally broke to a higher range. And where we broke from here. I'll get this number in a second. It looks like it's around 135.80 or so. So you have to look at that 135.80 as a pivotal level, although 136 is going to set the tone going forward. Now, if you go to the 1-hour chart, we came close to this 200-hour moving average. It comes in right now around 565, which is around yesterday's Friday's low. So 135.65, although not a major level, is, you're kind of trapped right now between the 100-hour moving 200-hour moving average and the 200 period 4-hour moving average. Of the two, 130, the 200 period moving average is most significant, and as long as we don't close above it, you have to assume the risk is on the downside. But with no real stops to go after, unless maybe we take out Friday's low, the euro dollar seems set to trade, at least for now, in this 135 to 137 level. I mentioned something on my GVI Forex service overnight, that one thing about the euro is we're in for slow growth there. The ECB is on hold for as long as you can see. Draghi's holding out the risk of QE, although I still think it's a long shot. And when euro dollar data comes out, if it surprises to the upside, those are probably levels you can fade, because it's not going to influence ECB policy. So, sum it up, that's it for now. Check this article out at the bottom of this page. I think you'll find it very useful. I post these all the time. And that's it. Good luck and good trading.